Well, the Fed is expected to cut rates at its meeting in September, given the recent weakness in economic data and moderating inflation. But did you know that the FOMC can actually cut rates without having a meeting? Here to tell us how is Yahoo Finance Fed correspondent Jennifer Schonberger. Hey, Jennifer.
Good morning, Brad. That's right. And a weakening job market, a weaker than expected jobs report last Friday has many on Wall Street questioning whether the economy is weakening and whether the Federal Reserve has waited too long to cut rates. Last week, the Fed opted to hold rates steady, but set the stage for a rate cut in September. That's about 7 weeks away from right now, though, and given that length of time, that has some floating the idea of an inter-meeting cut. That is cutting rates between policy meetings. The Fed will cut rates between policy meetings if they're concerned the economy is headed for a sharp recession or an economic shock has hit that could plunge the economy into a recession. And there are several instances historically where the Fed has done just this. The last time the Fed lowered rates between meetings was March 2020, when the pandemic hit and shut down the economy, sparking one of the sharpest recessions on record, though it was also one of the shortest. Now, before the pandemic, the last time the Fed enacted an emergency rate cut was during the financial crisis in January of 2008. Before that, in the wake of the September 11th attacks, and before that, in January 2000, following the bursting of the dot-com bubble. As for now, could the Fed cut before the September policy meeting? Well, JP Morgan chief economist Michael Ferroli says that, quote, there is a strong case to act before September, but that maybe Fed Chair Powell doesn't want to add more noise. On the flip side, bond portfolio manager Wilmer Stith of Wilmington Trust says the Fed won't do an intermeeting rate cut because they won't want to spook the markets. Though Ferroli, for his part, along with many other economists, conjecture that the latest jobs report raises the chances that the central bank could cut rates in September by 50 basis points instead of a quarter point. Powell said last week before the jobs report on Friday that the Fed was not considering a 50 basis point rate cut, but that the Fed has not made any decisions yet. Wall Street as a whole now pricing in more aggressive cuts as we go through the fall. 50 basis points for both September and November, followed by a 25 basis point cut in December. Now, Brad, while this jobs report was disappointing, Chicago Fed President Austin Goolsbee told Bloomberg Television on Friday that the Fed's not going to overreact to one report, making the prospect of an intermeeting cut probably unlikely. Back to you.
All right, Jennifer, thanks so much for taking us through that. Appreciate it.